Hi everyone, welcome to QuikTalk where we discuss any topic in brief. In today's video, we are going to discuss clubbing provision under the Income Tax Act. So let's begin. Clubbing of income under Income Tax Act of India is a provision that combines the income of two or more persons for tax purpose. The purpose of clubbing is to prevent tax evasion by shifting income from one person to another who is in lower tax bracket. For example, there are two persons who are husband and wife A and B. A transfers some assets to his wife B without any consideration, then the income earned by asset transferred by husband, it will not be taxed in the hand of wife, rather it will be taxed in the hand of husband only. This is called as the clubbing of income. Thus, this clubbing of income is covered by section 64 of the Income Tax Act. Let's see some situation where this clubbing of income shall be applicable. So as told before, this clubbing will be applicable in first case where any assets are transferred without adequate consideration by a spouse to another spouse. Let's understand this with an example. A transfer house property to his wife B without any consideration, then the rental income from that property will be clubbed with A's income and it will be taxed accordingly. Another example is if A transfer a fixed deposit to his wife B without any consideration, then interest income from that deposit will be clubbed with A's income and it will be taxed accordingly. Therefore, whatever assets is transferred to B and whatever income is getting generated on the assets transferred, it won't be taxable in hands of B, but rather it will be taxable in hands of A only. Let's see another situation where there is some assets transferred by a parent to his minor child, except disabled minor child. Then in such situation, what will happen? The income generated from transfer of those assets to the minor child will be clubbed in hands of parents only, and it will be clubbed in hands of those parents whose total income excluding minor's income is higher. The parent can claim exemption of 1500 rupees per minor child as per section 1032 of the Act. However, this clubbing provision shall exclude those cases where income earned by the minor is due to his skills, knowledge, experience, etc. etc. For example, if parent A transfer some share to his minor child C, then whatever dividend will be earned on these shares will be income taken as a income of parents only. It will not be taken as a income of minor child. But when minor child earn any income due to his skill by writing a book or winning a competition, then those income will be of minor child only and it will not be clubbed. Similarly, in another situation, when an individual invests in a firm or association of person in which he or she is a partner or member, his or her spouse also invests in the same firm or AOP. The income from such investment is clubbed with income of the spouse who has higher share in the firm or AOP. Let's understand this with an example. There is a company called XYZ Limited and there are two shareholders A and B who are husband and wife. Husband is having 90% of the share of the company and wife is having 10% share of the company. And whatever salary wife will be getting from this XYZ Limited, it will be clubbed taken as a income of husband only. It won't be taxed in the hands of wife as her salaried income. But there are certain exceptions also where the wife is qualified master degree holder, then it can be taken as a income of her. So these provisions have some exclusions also that we need to see in detail with our tax experts. Similarly, when some asset is transferred to HUF or asset is transferred to a person for benefit of his or her spouse or minor child, the income from such assets is clubbed with the income of transferor. So this is also situation of the clubbing provision. Or when we transfer some assets to HUF Hindu undivided family, whatever income a Hindu undivided family will earn, it won't be taken as a income of HUF, rather it will be taken as a income of that person only. These are the some example of clubbing of income under the income tax of India. Clubbing of income has implication for tax planning and compliance for individual, and therefore one must consult tax professionals before executing such transactions. This is all for today's video. For original blog, please visit www.myostra.in, where we keep posting blogs on different tax topics and more. Thank you very much for watching this video. Please do not forget to like and subscribe for more such videos. Thank you.